Hello everyone, my name is Ivan Survey and I'm here to walk you through your open enrollment for AFLAC as well as flexible spending. So I want to give you an overview of what AFLAC does and what it does not do. So first, AFLAC, everyone sees the commercials on TV, but not everyone really knows what exactly we do. We do not change or replace anything you currently have through the school regarding your health insurance, or if you have it through a spouse, that does not change. AFLAC is merely an addition, and where we're a little bit different is we pay you cash directly in the event of an injury, an illness, missed time at work, maternity, COVID, whatever it is. We do not change or replace anything you currently have. Some of the features of the programs are our rates never ever change. So when you sign up for a program with AFLAC, you're locked in at that rate forever. Even if you leave the district, you're able to keep the policy with you forever. And you can cover children up to the age of 26 as well as spouses. Most of the policies are done on a pre-tax basis, with the exception of the first plan I'm going to explain to you, which is the short-term disability. Short-term disability is income for your paycheck. Everyone loves what they do. Everyone has sick days, vacation days. You also have state disability. But what you do not potentially have if you don't have this policy is an extra layer of financial protection that's going to help you if you do go out of work due to an injury, due to an illness, or a maternity leave. So with AFLAC short-term disability, you're able to decide how much money you're going to receive on a monthly basis for up to 6 months of being out of work. This is based on a couple different factors, your age, your income, things like that. We're going to let you know the maximum benefit that you're able to take on, and then you can decide when that plan starts paying you. And like I said, you will have coverage up to 6 months. You can also use this plan for maternity as well, but you do have to have the plan in place for 10 months before the baby is born. The next policy is the accident plan. So the accident plan doesn't have anything to do with you missing time at work. It's going to give you extra money for the treatments you receive due to an injury of any kind, whether it's something small like a sliced finger cooking dinner, all the way up to the catastrophic car accidents or anything like that that happens. If you have children, you definitely want to consider this plan because kids, quite frequently are getting hurt. You can use this plan as many times as you need. You can use it anywhere in the world. AFLAC just needs proof of the services that are performed, and that's going to trigger a payment to you as the policy holder. So it's going to pay you for your visits to the doctor, the emergency rooms, the hospital stays, whatever you can think of that comes about as a result of that injury, physical therapy, all of those things are covered. So they're going to give you a set amount based on the treatments that are performed. You can use all of these policies hand in hand. So if you have a disability plan and you're out of work due to an injury, you're going to be able to get paid on both policies. The next policy is the easiest plan to really understand. That's the hospital plan. It's very, very simple. What's going to happen is if you're hospitalized overnight for any reason, they're going to pay you $1,000 for that first night. Each additional night after the first night is $50 payable to you. So once again, you can use this hand in hand with another policy. It's very, very easy to understand. The other policy that we do offer through AFLAC is a cancer and critical illness plan. So what that plan does, it's going to pay you cash directly as a result of a cancer diagnosis. It's going to be either $4,000 or $6,000 upon diagnosis. That amount actually grows by $500 each year that you're not diagnosed with cancer. So for example, if I sign up this year and I'm diagnosed in 10 years, I'm not going to receive the $4,000 or the $6,000. I'm going to receive $9,000 or $11,000. That'll grow until age 65. Kids are covered for free. There's no additional cost for children. And we do have a rider that does cover other things as well, other diseases, other illnesses. So if you're looking at, getting the best plan, you can add on that rider. It's an additional expense. Last but not least, we do also administer your flexible spending program. What is flexible spending? Flexible spending is a way for you to save money on taxes for those expenses that you normally incur anyway. Things like co-pays, deductibles, prescription drug costs, dental work, vision work, glasses, things like that. So normally when you have an expense, you're paying for it with a bank account, a debit card, or a credit card. When you have the flexible spending, you're going to use pre-tax dollars, so you save money on taxes. We also have a separate account that you can set up that's going to actually pay for those childcare expenses like daycare, babysitters, summer day camps, things like that. The maximum you can set aside for the medical is $2,850 per year, and the maximum you can set aside for the child care is $5,000 per year. So we encourage everybody to set up a time with us, to meet with us when we're on site. We're going to be there for 3 separate days. If you're not able to meet us in one of those days that we're on site, there's also an option where you can contact us directly and set up a time, and we can meet with you remotely as well, whether it be on a phone call, a Zoom, a WebEx, whatever it might be. But we're excited to help everybody this year, and I thank you for taking the time to learn a little bit more through this video. Thank you.